Welcome to the Worldwide Markets Introduction to the Forex Market Education video. In this video, we're going to give you a brief overview of what the Forex market is all about and try to show you some of the key terms and definitions that you're going to need to know to become a Forex trader. The Forex market is considered an over-the-counter or interbank market due to the fact that the entire market is electronic and continuously runs within a network of banks over a 24-hour period. So unlike your stock market, your future, and your options market, there is no central exchange and currencies are traded 24 hours a day, 5.5 days a week. So your foreign currency can be traded from anywhere in the world at any time as long as you have a computer and a high-speed internet connection. So this is very evident from worldwide markets and their client base. We have clients in over 100 countries, and as long as our clients have a high-speed internet connection, they can upload and trade from our platform from anywhere in the world at any time, whether or not they're sitting in their office in Hong Kong or sitting on the beach in Aruba. These are the currencies that are traded within the worldwide markets trading platform. You have your US dollar, your euro, the Great British Pound, which is also known as the sterling, the Japanese yen, the Swiss franc, which is also known as the Swissy, the Canadian dollar, which is also known as the loonie, the Australian dollar, which is also known as the Aussie, the New Zealand dollar, which is also known as the Kiwi, gold, silver, and oil. These three-letter abbreviations are how you're going to see these currency pairs represented in the trading platform, as well as some of the other market analysis materials you'll see online provided by Worldwide Markets, as well as other Forex sources you will read. Currencies are always traded in pairs. For example, the AUD/USD is the Australian dollar versus the US dollar, or the EUR/JPY is the euro versus the Japanese yen. You're not going to be trading currencies individually. You can't just go buy euro in the spot Forex market. You have to trade the euro versus another pair. And the way that you see the pairs represented in our trading platform is the only way that these pairs will be represented. For example, the AUD/USD is the only way that the Aussie is going to be traded against the dollar. You will never see it reversed with the US dollar versus the Australian dollar. It will never be represented like that. So please take note of how the currencies are represented in the platform, because that's how they will always be represented with every broker, trader, Forex market, news source, whatever you're looking at. The currency on the left side of the pair is called the base currency. The currency on the right is the counter or cross currency. The pairing shows the value of the base currency measured against the counter currency. So if the current rate of the Australian dollar versus the US dollar is 1.0148, then 1 Australian dollar equals 1.0148 US dollars. If the euro versus the Japanese yen rate is 133.17, then 1 euro equals 133.17 Japanese yen. Now, you'll hear a term called PIP when you're trading Forex. A PIP is also known as a price interest point, and it's the smallest price change that a given exchange rate can make. Most pairs are measured to 4 decimal places. However, in the case of the Japanese yen pairs, they are measured to 2 decimal places. So, for example, as we stated previously, if the euro versus the Japanese yen is 133.17 and that moves up to 133.18, that moved 1 pip. Now, you next need to know what the value of a pip is. For pairs with the US dollar as the counter currency, for example, the Australian dollar versus the US dollar or the euro versus the US dollar, 1 pip on one standard lot, which is 100,000 units of currency, equals 10 US dollars. 1 pip on one mini lot, which is 10,000 units of currency, equals 1 US dollar. for 1 pip on 1 micro lot, which is 1,000 units of currency, equals 10 cents. For pairs with the US dollar not as the counter currency, for example, the euro versus the Aussie, the dollar versus the yen, 1 pip is worth roughly $8 to $13 depending on the pair for a standard lot. $1 to $1.30 for 1 mini, 10 cents to 13 cents. For a micro, these values will change. Sometimes they will be a little bit less than $10 or $1 or 10 cents depending on the exchange rates. Okay, so now you have lot sizes. As we mentioned before, you have units of currency that your Forex pairs are traded in, because there's not one single unit of measure on every currency pair. So you don't have a dollar component on every currency pair, so there has to be a standard measure, which is the unit of currency. So a standard lot is 100,000 units of currency. A mini lot is 10,000 units of currency, and a micro lot is 1,000 units of currency. And lots are always traded in multiples of 1. So if you wanted to trade 1.5 standard lots, you'd have to trade either 1 standard lot and 5 minis or 15 mini lots. Next you have the bid-ask spread, which is, here you'll see a screenshot of the pricing in our MetaTrader 4 trading platform, and you'll notice that the price on the left hand side is the bid price. So this is the price at which if you're going to sell this currency pair, this is the price you're going to sell at. The ask price is the price if you were going to buy this currency pair, you would buy at. So the ask is also known as the offer. The spread is the distance measured in pips between the bid and the ask. One of the advantages of the Forex market is that you can both buy and sell these currency pairs. So whichever direction you feel the market is going to go, you can trade that accordingly. Leverage is one of the reasons why traders get involved in trading Forex. You can control a large position of currency with only a small amount of actual capital. So if you wanted to purchase 100,000 units of currency, with $1,000, this represents 100 to 1 leverage. Worldwide Markets offers up to 400 to 1 leverage to its clients. With 400 to 1 leverage, you can purchase 1 standard lot on the Australian dollar versus the US dollar for $234.77. Margin is the amount of money needed to open and maintain your Forex positions. After you open a live Forex trading account, your margin, which is the money that you deposit into your account, which will act as collateral for your trades. So depending on your leverage that you choose to trade with, the same size position can have 2 different margin requirements. So for example, we'll stick with the Australian dollar versus the US dollar pair. If you were trading on 200 to 1 leverage, it's going to be $469.55 for 1 standard lot. If you're trading at 100 to 1 leverage, it's going to be $939.10. In this example, the position, you're still trading the same exact size, 1 standard lot or 100,000 units, but the amount of margin that you need is going to vary based on the amount of leverage that you choose to trade with. At Worldwide Markets, you choose how much leverage you want to trade with, whether or not it's 50 to 1 or 400 to 1, it's your choice based on your preferences. But the general rule is more leverage equals less margin required. The last term that we're going to go over today is liquidation level. The liquidation level is the account value that initiates the liquidation of all clients' open positions at the best price or exchange rate available at that moment. And this pretty much means that you have overtraded your account, you have opened too many positions, or you've lost too much on any single position or the group of your positions. So one of the reasons why we decided to mention this in the beginner's introduction video is a lot of traders will have a tendency to overtrade their account, and they need to know what liquidation is. So liquidation occurs when the account value is not sufficient to maintain the current open positions. So you don't have enough margin in your account to maintain your positions, including the losses that you took on those positions. So in closing, we have a quick disclaimer for you. So the purpose of this is just to acquaint you with basic concepts in Forex. It is not intended as an exhaustive tutorial, and it's for educational purposes only. And please remember that foreign exchange trading includes exposure to risk, and you should only trade discretionary capital. Should you have any further questions, please visit us at worldwidemarkets.com, or you can send us an email at backoffice@worldwidemarkets.com.